All right, let's talk. We're going to take a good look at your finances today, but maybe not in the way you're used to. See, we're not just going to look at the numbers. We're going to question the entire system, the way your bank accounts are set up, and ask one really important question. Is any of this actually working for you?
Do you ever get that feeling? Where it seems like your money is just everywhere, spread out so thin, and it feels like it's working harder for your bank than it is for you. It's like you're constantly busy managing it all, but you're just treading water. It's a really frustrating place to be. I get it.
Okay, so what you're looking at here, this is what most people consider normal banking. On the left, you've got the whole mess. The big mortgage, a checking account that never seems to have enough, a savings account earning, what, pennies? And then, of course, the high-interest credit card debt. It's a total juggling act, right? But now, look at the right. What if we could sweep all that complexity away and have just one single unified account? And that's the big idea we're diving into. Just imagine, for a second, one account that's not just a parking spot for your cash. Think of it more like an engine, an active tool that's constantly working to crush your debt and make your financial life so much simpler. This isn't about earning more money, it's about making the money you already have work way, way smarter.
So what is this thing called? It's known as offset banking. And really, it's a super smart way to handle your finances. It takes all those separate pieces, the mortgage, any other loans, your savings, and this is the key part, your income, and puts them all together. One streamlined all-in-one account. Honestly, it completely changes the game.
So, you're probably asking, okay, what's the bottom line? What's in it for me? Well, the promises here are huge. We're talking about saving thousands, literally thousands in interest, paying off your mortgage years ahead of schedule, and you still have all the flexibility you need. Let me give you a quick example. Let's say you've got 10 grand sitting in a savings account, earning you maybe $100 a year if you're lucky. In this system, that same 10 grand immediately knocks down your mortgage debt, potentially saving you $1,500 in interest. See the difference? That's the kind of power we're unleashing here. All right, so how does this actually work? Is it complicated? Not at all. It really just comes down to a simple three-step strategy. And the best part is, it uses assets you already have to start working for you, not against you. Let's break it down.
The foundation for this entire thing is something you've already been building, the equity in your home. We're basically setting up a secured line of credit based on that value. Now, you're not taking out some brand new loan. Think of it more like we're just unlocking the value that's already sitting there in your house and turning it into one central, super flexible account.
And we're not talking about a small amount here. You can typically get access to a line of credit for up to 80% of your home's value. That becomes your new single credit limit. And the best part? The interest rate is way, way lower than what you're paying on things like credit cards. It's a game changer.
So the plan of attack is simple, just 3 steps. Step 1, we're going to consolidate all that nasty high-interest debt. Step 2, we're going to put your savings to work in a much smarter way. And Step 3, the big one, we're going to leverage the power of your paycheck. Okay, first things first, and this is a big win right out of the gate. We use the funds from this new account to wipe out those really expensive debts. I'm talking about that credit card that's charging you 20% interest. Poof, it's gone. We consolidate it all at a much lower rate. It's like we're stopping the financial bleeding, instantly. And this right here, this gets to the absolute heart of the problem. You're working hard, putting money into savings, and the bank gives you what, 1%, maybe 2%? At the same time, they're charging you 20% or more on your credit card. That giant gap between the two, that's your money just vanishing. It's a system that's set up to benefit them, not you. So here's where it gets really smart. The next step is to move your savings, yes, your savings, directly into this all-in-one account. Every single dollar you deposit instantly reduces what you owe. Think back to that $10,000 example. Instead of earning you a few bucks, it's now saving you from paying a much higher interest rate. That's a huge guaranteed return on your money right from day one. But listen, consolidating debt and using your savings, that's just the start. The real game changer, the secret weapon that puts this whole thing into overdrive, it's your paycheck. This is where your regular income becomes an absolute debt-destroying machine. Just think about your finances right now, the day before you get paid, right? Your debt is at its highest point for the month. It's just sitting there, and every single day, interest is being calculated on that entire amount. It's just a static, expensive number. But watch this. The second your paycheck lands in this new account, bam! Your total debt balance is instantly knocked down by the entire amount of your deposit. Your money isn't just sitting in a checking account doing nothing.
From the very first second it arrives, it's actively working to lower your debt and slash your interest costs.
And this isn't a one-time thing. This happens with every deposit. Your salary, a bonus you get, that extra cash from a side gig, it all gets put to work immediately. And since interest is calculated daily, every single day your balance is lower is a day you're saving money. You can imagine how that adds up over time. It's huge. It's how you get out of debt years faster.
So, okay, we've gone through the mechanics of how it all works. But what does this actually feel like day to day? Because it's about more than just numbers on a screen. It's about totally changing your relationship with money. It's about simplicity, and it's about being in control.
And you might be thinking, this sounds powerful, but is it a pain to use? And the answer is no. That's the beautiful part. It works just like a regular checking account. You can still write checks, do all your banking online, use a debit card for everything, and get cash from ATMs. And you get unlimited transactions for one low monthly fee. You're not giving up any convenience to get all this financial power.
So let's just tie this all up in a neat bow. You've got these amazing features that lead to incredible outcomes. Consolidating your debt? That saves you thousands in interest. Simple. Having your income deposited directly? That gets you debt-free years sooner. And having it all in one place? That gives you total financial flexibility. It's a straight line from these features to financial freedom.
Look, at the end of the day, it's a really simple but powerful idea. This isn't some crazy complicated financial trick. It's just a more logical, more intuitive way to handle your money. It's about finally putting your interests first. Frankly, it's banking the way it should have been all along.
So I'll leave you with this one question to think about. I want you to really ask yourself, how much is your current bank setup really costing you? When you add it all up, all the high interest you're paying, all the low interest you're earning, all the different accounts, how much money, and more importantly, how much time are you losing? The answer, well, it might just be the reason we're having this conversation.